Hello folks, let's get cracking. Okay, so we're having a look, quickly having a look at the general market. Then I will go into advanced divergence, or just looking at some divergence setups, helping you with your training along there. So yeah, first of all, we're looking at the euro dollar. Euro dollar on the daily chart has been trading below this level for a while, few days. It went over, slightly over in this period, broke down, made a lower low, and has retraced to this lower high area over here. And so earlier today, price was testing. If you look at these high points that the market has made, these high points over here, pointing up yesterday and today, this high point, that's pointing out resistance. Just look to the side. We can look at here where price fell down from in the past. Those high points is testing resistance. Go down to our 1 hour chart, and we saw there was a little bit of a breakdown earlier. She's on a bit of a retrace at the moment. As we will discuss earlier, this could have been a trade. We'll discuss that just now. We'll discuss that a little bit later. Okay, and we'll move on to the pound dollar. The pound dollar has made quite a nice little bottom on the daily chart. This is a very nice bottom, that V shape, or what the Japanese call the wok, which is supposed to turn the market around for a long-term move. But I won't just trade it because it's a bottom. It's bottom picking as it's known. So we need the market to go on the other side here and make highs and lows on the other side. Then we could start thinking about bullish moves and bullish trades. But yeah, it's still very much bearish here. And we also will see, but just now when we look at divergence, a nice sell that there was earlier today that we should have actually taken. I regret I was not busy. I was busy at that stage. Look at this beautiful falling wedge here. A falling wedge supposed to break up. So if you get a full body candle closing on this side, this is the dollar CAD, the dollar yen, sorry, the dollar yen. A full body close on that side could call for more bear action, more bull action. I'm sorry. Of course, the Japanese yen is so high. It's always, I always feel it's so risky buying when price is so high. But this is a classical falling wedge, and that's the way you would trade it. If you had a bullish close, a strong bullish close on the side of the falling wedge. Moving on to the Australian dollar. The Australian dollar also was trading above this level for a while, the 85.50 area. It even made a little low here and then pushed up, but now it's broken through and made a lower low, taking that low out. So I think more bear action should be on the cards over the next few days or weeks. Okay, a retrace to that line, more or less. Okay, would go to a smaller time frame to find the entry, of course, but more or less that level could be an entry point. Actually, I would prefer if she just falls more and gives us a retrace. Hi, Benjamin. So, yeah, we'll just see. Well, let's have a look here. We actually have a lower low here at the moment. Lower low. There's a lower high. She's actually fallen down already, hey? If I look at it like this, ABC, using this high point to this low point as my retracement fib levels, I can see that she reached the 50 Fibonacci level before she broke down. We didn't really have a diverging effect. We kind of had there, but it wasn't. I like to see a more diverging effect before we take the trade. But yeah, I think there's more bear action. We should probably get some more bearish setups in the next few days. The CAD has just sprung a bit of a surprise on us. The CAD all of a sudden was one of the top performing currencies today, and she all of a sudden took a bit of a knock. And I think it's got something to do with the OPEC meetings. They just released the OPEC production, oil production is going to be cut over the next short while, and the dollar all of a sudden rallied out of nowhere, and the CAD all of a sudden tanked. So that really is a sign of the news that just came out. Unfortunately, we had a beautiful technical setup on the euro CAD. We'll look at that in a moment. But usually with oil, the better oil does, the worst the dollar does. If oil does well, the dollar does bad, or the other way around. But the Canadian dollar again, if oil is strong, Canadian dollar normally is strong. Okay, and I think that really this whole thing about the production of oil being cut was not good for the CAD. That's the best way I can read it. But yeah, the CAD was one of the stronger currencies of the day. On the dollar CAD, it's really this. We've got this very strong trend line in effect here. As long as this trend line holds, I think we will have more bear action on this chart. Of course, a strong bullish close on that side would call for the bulls to potentially take charge of the market again. Moving on to the Euro Ord. Euro Ord, just a very odd little head and shoulders that it had over there. I didn't trade it, of course, because it didn't look perfect. But yeah, they a full body close on the other side of the neckline ended up sending price down. But now we are getting a lower low, lower high. So tomorrow, if we have a nice little diverging top here, maybe, or anywhere in this vicinity, we could probably potentially consider going short then. Now here, oh, look at that. Now this is absolutely news related. This has got really nothing to do with the technicals. Hey, now, unfortunately, we are on the wrong side of that. We're out already, but yeah, that is purely news. It really is. We had a fantastic little setup here. I actually had no worries about this one. Sometimes I'm worried about my positions and double checking them. And this position I was really quite confident about because the market's made a lower low here. It's retraced all up here. This whole area is a lower high. We can clearly see the resistance support here, which now potentially can act like resistance. So it's really a perfect setup from that perspective. Fibonacci, ABC, all the way from up here. And she's gone into the 50 to 61 point zone. She poked in there. And of course the zone, the 50 level, really lined up with nice resistance. So that's an unfortunate one. Also really nice little rising wedge. Okay, the reason I got into the trade was because of this bearish engulf. Over here, this bearish engulf that formed outside of the rising triangle, and also, if I make it a bit bigger, you'd see that the high here was testing into this bearish engulf here. So this bearish engulf was a test of this bearish engulf. We were up a few pips at some stage, not too much though. Yeah, about 18 pips at the most. Don't know if you take your spread off there. So yeah, we were obviously challenging this low. Yeah, now this is supposed to be a measured move. So if I take the size of the wedge and where it broke out, sorry, that's the size of the wedge there. Yeah, so that's where she broke out. So she should have fallen at least until this point. Yeah, from a technical perspective. Unfortunately, we had our take profit just a little bit higher than this over there. But this is a really aina, isn't it? But anyway, moving on. Good setup, just not the result we want. The head and shoulders here on the pound, this is one forming. So if it knocks here, more or less, okay, it could be maybe even a bit higher. We don't exactly know where this point is going to stop. But more or less, wherever this makes a top, if it then takes this bottom out here, full body close below here, we could have another head and shoulders on our hands. And of course it's a measured move. So a measured move, you would take the size of the structure more or less, and that's how much you would fall. So if you do have a close over, wrong one. If you do have a little full body close of a candle over here, you would obviously sort of hope so you would want to take the trade, the price over here, and hopefully that you would fall all the way to down here. So something to look out for. CAD, oh, you see, even the pound has really been getting hammered by the CAD today. The pound was getting hammered by the CAD today, and now the CAD is giving the pound a hammering. Oh, sorry, the pound is giving the CAD a hammering, where the CAD was giving the pound a hammering earlier today. Also a trade that, oh, we should have taken. It was a bit difficult because this low point here, if we took it there, our stop would have been a bit high, and we would have been up about 40 pips though, minus spread, we would have been up about 40 pips. So we could have traded that one differently is where we had a full body close, and this was this bearish engulf. That was also basically a full body. What I mean about full body, most of the body must be sticking on the other side of the trend line, which is, yeah. So obviously this is closing in the wedge, and there's the body closed. Now this is a full body close. The whole body has closed below the wedge. So that's when I say a full body close above or below an area. That's what I would mean. A whole body of a candle is out. So we could have taken that when we had this bit of a wedge effect there. We could have taken that a bit earlier today. And 50 pips for about a 40 pip stop just above that candle. That would have been a really nice trade. So I can. Okay, but we'll talk about this a bit more just now. Divergence, of course. That's our main theme today. But very good trade. That was there we had support, resistance, and acting like resistance again over here. We also had divergence from these points, all the way from this point to that point, as well as from these two smaller points. So later on I'll discuss the 2 points that are far away from each other, which is more of a long-term divergence effect. And then we have the more points for intraday that are more closer to each other, like these two. Okay, very important. Long-term trading, if this structure holds, then it's, of course, could be a long-term down move. But for intraday, when 2 points are close like this, breaks out a low, it's always good for a few pips normally. Pound franc, this one is a bit confusing. On the 1 hour chart, we've got this a triangle pointing down, but they're normally supposed to close higher, or break higher, which it did for a while actually. But I'm still backing it for short, because if I look in the 4 hour chart, I've got bearish divergence on the 4 hour chart. Of course, the area that she's in is a resistance area. You can look at this area right here, holding price down over there. Okay, so that's definitely more of a, for me, a sell area, and that's what's happening now. Actually, the franc is fighting back. So this is I'm staying out of it because the stop's going to be quite big. If we take this low out, this blue block, the low of this blue block, you were supposed to then fall until this blue block. Your stop is going to be quite big. It's a 4 hour chart, so there's a lot that could happen in that time frame. So 118 pips. So I'm going to stay out of that, but you can take it, of course. It would be a valid trade. Once again, we can see all the resistance over there, all the support that's now potentially turning into resistance. Dollar CAD, we've got a little mini head and shoulders over here as well. It's not the greatest looking one, but it's definitely an area of resistance. There's support, there resistance, here support, there support, here resistance, potentially support again, of resistance again. Lower low, lower high. We could go for the most recent Fibonacci, and we'll see it's on a 78 fib. And if I look at the biggest swing Fibonacci, it's where's it on? Yeah, it's close to the 79 on a 78, but it closed here by the 68. So there is Fibonacci here as well. Just for interest's sake, guys, a little big head and shoulders that we had over there. A big one. There's the head, the two shoulders, and the neck. Okay, full body close on the other side of the neck. Okay, that's where you could have entered. You could have put your stop just above the full body candle, or maybe at just into the structure, maybe, or a high. I like obviously a little high point that's in the structure is where I'd like to put my stop. There wasn't one in this instance. Okay, but you could have probably just put your stop above this high. That would have worked in this instance. But that's a nice full body close below the structure. Okay, just looking back. Other than this, nothing really I want to discuss. Okay, here's the CAD franc. We were also looking at this one maybe, but now this is a falling wedge. Excuse me. Excuse me for that. Falling wedge is also normally a falling wedge supposed to break up. So we were considering this one, and once again the CAD is being hammered because of the news. That's a good setup for long, especially if you look on the 4 hour chart where price was. It was even doing it on the 4 hour chart, but the daily chart, it's a higher high, higher low. But yeah, that one, it's a good thing we stayed out of that one. This is also tanking quite hard right now. So if you were brave, you should go short. You should go short, put your stop above here. CAD is really getting hammered right now. So, and the franc is the strongest currency at the moment. So, in current performance. So, I don't like trading after the fact. You know, I'd like to predict that price is going to fall more. It's a bit late right now, but you could, if you were brave, put your stop above there. If you get a close like this, you know, it's probably supposed to fall more. But no, I wouldn't do it. It's just too late. She's also falling quite close to support over here in this whole area. But she's tanking quite hard, isn't she? Have a look, see at the rand. The rand's been obviously this little downtrend that she's had on the 4-hour chart. She's found some support at this level where you see all these points. Resistance, resistance there, support, support, resistance, resistance. Found some support there. Broke the high, broke this little trend line, made a high on that side. Now she's made like this another high, a higher low over here. Higher low over here, the MACD's running up. So I don't trade the rand, but we have this little wedging effect. She's in a buy area more than anything else. So a bullish full body candle close on that side of that little wedge would be long. Okay, that's what we're doing. The best way to judge if a wedge or a triangle is supposed to break up or break down is, what do you think? Is the market testing support quite strong, or is it testing resistance quite strong? And then normally back, if it's testing support, you back the buy. If it's testing resistance, you back the short. Okay, thanks guys. That was just a quick market overview. Now I'm going to quickly discuss divergence. Okay, so last week we had a very basic divergence discussion. This week we're going to just do it a little bit more advanced. So first of all, the market makes 2 points, 2 high points, and our oscillator indicators okay. So market makes 2 points, one higher high, okay, higher point. This high is higher than that high over there. Okay, this high is higher than that high over there, but the oscillator is pointing down. So this is what we call bearish divergence, when the price is making 2 points that's more or less equal, or one is slightly higher, but the oscillator indicators are doing the opposite. So that's an example of classical bearish divergence. Classical bullish divergence is when the market makes 2 points, a low and a lower low, and then a higher low. That's what we call classical bullish divergence. So now the oscillator indicator is showing the market's hand by potentially running up, although price might still be falling, or these 2 points might be almost equal. So that's classical bullish divergence. Now the high in between the 2 line points becomes our breakout area. Just like in a selling case, the low in between the 2 diverging points become our sell area. Okay. Now, sometimes the market makes a low and a lower high. Oscillator indicators do something else. So here, this is the market, the top part's the market, and this bottom part's the oscillator indicator. Now the oscillator indicator is again doing the opposite to the market. The market's made a lower high, but that's a higher high on the, okay, a higher high on the oscillator indicator, your MACD or your stochastic. Okay, that's hidden divergence. Hidden divergence. Okay, so it means hidden divergence. When divergence is happening over tops, it's always sell, whether it be hidden or classic. And when divergence happens over lows, it's always for buy, even though it's hidden or hidden or classic. So hidden divergence for buy was when the market's made a higher high and a higher low, and the oscillator indicator, okay, oscillator indicator is of course made a low and a lower low. Okay, so now it's doing the opposite thing. That's hidden divergence. It always means buy. When lows diverge, it's buy. When highs diverge, it means sell, or potentially means sell. Okay, now sometimes these guys marry up with each other, believe it or not. Okay, market does that. Now this is getting advanced, isn't it? Bang. So now we have classic hidden divergence followed up by classical divergence. When that happens, there's a very good chance the price is going to go up. Very good chance the price is going to go up when it takes the breakout point out. Okay. Same with bearish divergence. Bearish divergence, 2 points. Oh, sorry, let me just... okay. A low, a lower high. Okay. So our oscillator, that's the market. This is the market. Our oscillator indicators does something similar. Okay. So from this point to that point, that's hidden divergence. But from this point to that point, it's classical divergence. That is a very strong signal that price is going to see a buyer fall. It's going to say goodbye and fall. Hopefully. It's a good sign normally. Okay. So that's classical and hidden divergence together. They often go hand in hand like that. And that's a very strong signal. Okay, so now let's look at the actual charts. Okay. So, first of all, now this is not, if you look at the textbooks on divergence, this point to that point isn't really divergence. They have to be either equal or one has to be slightly lower, but I would still regard it as divergence because it's giving you the idea that price is going to fall. Okay, and if you look very nicely at the MACD and the stochastic, we use the MACD standard setting, stochastic standard setting for this to spot the divergence. So those 2 points were diverging with each other. I regard it as divergence still. This little point is the breakout point. We always pick an insignificant little point in between the two diverging points as our breakout area. Over here, we had a nice hidden divergence. This is just a nice hidden divergence. Highs going higher, lows going higher, but the opposite on the oscillator indicator. Okay, that's supposed to mean buy. Okay, and as it, of course, price went up. Over here we have divergence, bearish, classical bearish divergence, where price is quite far. There's quite a lot of price action in between the 2 points, which is not my favorite. I like it when the 2 points are close together like this, with a low point in between nicely wedged. When you see a big divergence like this, though, where 2 points are far separated from each other, that's normally where you're going to start getting the wedging effect. And as we can see, the wedging effect, little rising wedge was broken below. Rising wedge is supposed to break lower. Falling wedge is supposed to break higher. Okay, so here we had a big candle close outside and she kept falling. And also here we had hidden divergence at this point that went up from this point to this point. And then if we compare it to what we have on the stochastic, it's going the opposite direction. Over here we've got classical bullish divergence, these 2 points. Look at the oscillator indicator over there going up, although price was still falling. This insignificant little high in between the two is, of course, the breakout point. Over here we also have 2 little diverging points with each other, but preceding this classical bearish divergence we had hidden divergence. So from that point to that point was hidden divergence. Look at the MACD, the stochastic, but from that point to that point is classical divergence. Very strong signal, really powerful. Then here again we just had the classical divergence type, the little breakout point in between. This little insignificant low here was the breakout point. Let me just make this bigger to make it easier for you to see. Okay, the lower low, lower high, hidden divergence, classical divergence, takes that low out and price broke down quite hectically. Another example of hidden divergence, you can look at the stochastic from that point to that point. It's not really my style to trade hidden divergence by itself though. Only hidden divergence followed by classical divergence is a trading opportunity for me. And then of course over here we've got the type of divergence I like, 2 points close to each other. 2 points relatively close to each other. With the divergence, look at the MACD running down over there, and this area below here is the short breakout area. Okay, I'm moving on to here's another example of divergence that's spread out over a long period of time. Okay, that's once again an indication of a triangle or a wedge. Now this was a triangle, there was a full body close below, and price kept on falling. Moving on to the pound dollar. Pound dollar had one. Now this is the trade I wanted to talk about earlier. This trade really paid nicely. Beautiful diverging top. And she took this low out and she's just been falling ever since. So really nice trade, eh? Perfect one. Over here is the type of divergence that are spread out, and if we look closely, it also created a wedge. So when divergence is spread out, it is supposed to break up. Okay, when it's spread out, it's supposed to be a triangle or a wedge. It should be forming a triangle or a wedge when divergence is spread out like that. Of course, our trigger is a full body candle closing on the other side. She didn't go immediately. She would have made you sweat for a long time, but she did eventually go. Yeah, these 2 points, really pretty divergence. 2 close points next to each other with a little low point in between here. It fell like a rock, of course. And of course, that might look like it's an uptrend going over here. But you must remember on the 4 hour on the daily, this was a downtrend. So you wouldn't really have worried about the fact that was a little uptrend. Just like this was a little uptrend. But on the 4 hour on the daily, it's not. It's still a downtrend, this point here. It's still a lower high on our bigger time frames. Over here we have got an example of the spread out one, but never triggered. If you look at the high, if you use the high point, but they were spread out fast, I never actually would have traded this as a breakout. You could have used that point to break out there. Price never really took it out, so. But I would not have, it's not close enough. A lot of price action happened here. This is more the one that's more like a wedge. Okay. Up here, beautiful head and shoulders, but we could also see there was divergence. Okay, how do you trade a head and shoulder when it breaks the neck over here? Now, a full body close would have been nice, but she fell so hard and never gave it to us in that example there. We also had another head and shoulders pattern, divergence showing on the oscillators, just giving us an idea that price might close. Then, of course, price closes above the neckline, a full body close there would have been your trigger. And this is the type of divergence that we are looking for quite a lot. Okay, these 2 points close to each other with this little insignificant low here. And then, of course, when price closes and breaks lower, it kept on falling. Okay. Some more hidden divergence here, guys. Here we have some hidden divergence from that point to that point. You can see there on the stochastic, it's running down. It's running down there. Let's see if we had some other, from that point to that point as well. I just skipped it, unfortunately. That blue point to that blue point for short. You can see it very nicely there on the stochastic, the equivalent points. Hidden divergence, more difficult to see and less important to see. Like I said, if you can start spotting it, followed up by classic, then it really becomes a powerful signal. I'm going to see if we can see. Oh, yeah, we had a couple of hidden divergences followed up by hidden divergences. There was the bullish one. You can just see very nicely there on the MACD. It's more difficult to see on the MACD. A lot more easier to see on the stochastic. And then, of course, from these points to these points as well, we also had diverging points. Although she never really made a higher, so I don't think we really would have been interested in that one. Okay, folks. So in short, we still want to stick to the basics of trading with a trend. So we use our bigger time frames together. our smallest time frame that we use for trigger is normally where we will look for divergence. So our two bigger ones that we use will normally use to help, we will use it to determine the trend. So you should be using your time frames either, if you're very aggressive, the 5, 15 and 1 hour chart together, or the 1 hour, 4 hour and daily together, which is my preference, or the 4 hour, daily and monthly together, or the daily, weekly and monthly together. So the smallest one out of the three is your trigger one, and the one where you're looking for your divergence and your breakout points, and the two bigger ones you use to determine your trend. So the ideal setup, for instance, for a sell would be if the market has made a lower low and lower high, okay, and then she makes the slight diverging point. The stochastic makes a low, makes a higher high, and then a lower high. So from there to there is hidden divergence, and from there to there, so therefore that's hidden divergence there, and from there to there's classical divergence. So that would be the ideal setup for the sell. Okay, as long as this area, the resistance area, okay, where you're selling from is, okay, sorry, this is the stochastic over here. So this area up here, okay, this is the chart. That's the chart. This is the oscillator. Let me just do that again. Okay, so this is price, lower low, lower high. Okay, the lower high makes a slight diverging top. Oscillator, who's following the market, of course, does this. Okay, so from this point to that point down, from this point to that point up, but from this point to that point is more or less equal, and from this point to that point is pointing down. So that's the perfect one, where we have a lower low, lower high, we have hidden divergence from these 2 points, and then we have classical divergence from these 2 points. That's the perfect setup for down. The perfect setup for buy is when the market, which is this, has made a high and a higher high. Okay, and it's made a slight diverging bottom. The stochastic following price, of course, it's done something like that. Now from this point to that point is hidden divergence. From this point to that point is classical divergence. So that's the ideal setup for buy, and if you've got a good support area or resistance area, the trades should work quite nicely. Okay guys, if there's any questions, feel free to email me at nicholas@forexvarsity.com, and keep your eyes out for divergence. It's really a very important part of trading. In fact, it is I have to have divergence before I consider taking any trade. No divergence, no trade. Thank you very much everyone. Have a lovely day.